Good evening traders, it's Simon at Kairos Capital Markets with a weekly review of Aussie dollar, pound yen and euro dollar. So last week, or the week that's gone, we expected the US dollar to devalue in price, and it never did, which is sometimes the way trading goes. So let's have a look what happened then. So we've got this on the weekly perspective on the DXY, this bullish candle here. Never had a strong close above 94.5, doesn't really look that strong on here. And it just makes this area here a bit messy as such. Now, when you break it down to the daily chart and the lower time frames afterwards, on the daily you got this like bearish high test, which doesn't really reject anything whatsoever. And when we even come down to the lower time frames, the 4-hour chart, it's in the middle of nowhere. So I'm not going to turn and tell you this is a lower higher and off we sell, purely because it doesn't give me that much confidence to sell at this level right now, where you can creep up a little higher, put a triple top in, and then break down, which would be a far greater trade. And second of all, it's where you got to put your stop. It just doesn't make any sense whatsoever to actually give you confidence. So for me personally, I'm going to sit on my hand with the all dollar pairs itself, because as you go through the Aussie dollar and the euro dollar, you will see what I mean by they're in the middle of nowhere. They're all confused. They are, you could say the least. So let's have a look at the Aussie dollar now. And what do we have here? So again, on the weekly perspective, multiple low tests there, and rejections all around this area here. So to me, it is struggling to go lower. Clearly you can see that, but at the same time though, we're also struggling to go higher here. And you can see on the daily chart here, what we've got is like this near kind of rejection of 75. Not really go near it at all, but it's just near it. To come down, then we're going back up again, and you can see that again on the lower time frame, the 4-hour chart. The only thing on this trade itself, though, this pair, I've drawn this line at 736. Just tap that in, pop it for you guys. The reason why 736 looks so nice and key is because we got 1 touch, 2 touch, little kiss there, the 4th touch there, and this is, you could say it's a lower high roughly, but it looks like it's projecting the 736. So for me, it's kind of more of a double bottom. Clearly, we have a higher high here. So the fact we're moving off of this level does give me some confidence that the Australian dollar will get more stronger this week. And this means AUDUSD should move back up to the dizzy heights of 0.75. So now, I'm going to show you euro dollar now, because euro dollar is a very, very similar pair here. We got this triple bottom had from last week, which I outlined. We moved up. We did test the daily 50 EMA. Funny enough, I did get out of this pair. Then I didn't like it. After this, it moved around here. So I actually had my stop at 1.172. Just because I want to make a little bit of profit. I didn't really like it too much, so I got out round about a kiss down here somewhere. I didn't like it much. It didn't look too great. I thought, just get out and I'll see what happens later on. Now, when you come down to the lower time frame, this chart will be a little bit messy to start with. I'll explain to you what's happening here. So when you did come down to the lower time frame here, this downward sloping trend line. Let me just take this box out for a minute. We'll put that back later on to explain why. The downward sloping trend line has kind of kept in contact there, and then we did break down to the downside. So for me personally, it has rejected that. And again, this is what I mean by how I do feel the US dollar could come back down to 1.155, purely because it's rejected this trend line. It is in the middle of nowhere. It's not the best buy in the world. Now, what I will like to put into this now is the volume indicator. Now, I want to show the volume indicator only on this section here we've got. So it's a fixed range we want. We go from there, and we'll do it to there, okay? Now, what this gives you here is this little section here I've just highlighted. And there's a few things I want to show you here. The red line shows you the highest volume possible, okay, where most of the trades have taken place. And you can see we're just above that now at the moment. Doesn't mean we're going to stay above it. What it does mean, though, is that this area here is quite strong. And these bars here shows you where the strongest area overall is. So I'm going to now put a blue box in to give you this example. That's why this blue box was there. And you have something like this. So for me personally, if we was to break below 1.155 with volume, then I would expect us to to carry on going lower. So giving an example of volume, I mean, is like, see this volume bar here and this one here. If that was there but come further down nicely, then yes, I agree, it'd be nice. Again, likewise, if this amount of volume was green and going to the upside above this trend line, and obviously above the box as well, that would be key. I mean, you could actually almost say that, like, this section here is the highest volume there is. So for us to break out of this section now with the downward sloping trend line with higher volume, that would give you a good indication that EURUSD will head back up higher to maybe 1.2, which I highlighted previously. And that's why I had that blue box in earlier. So what I'm looking for now really is confirmation that this is going to happen, and for me it needs to be volume, and that's all I really care about. If we do break up to the upside, to give you an example, I'd use this area here as a base for my stop. So we may get entry there, we could put your stop like that there, for example, and you can target the 1.2 again like that. It's 1.2% trade there. I know a lot of people don't like that kind of size stop of 170 pips, but this is where you're right and this is where you're wrong. You could be a bit more aggressive and make it stop like that if we do break out. Obviously, if you do break out nicely there, you may find you go to yourself, well, that's good. The downward sloping trend line should hold us in place. But like I said, it's not the most safest. That is the safest there. But either way, though, that's what I'm kind of looking for if I was to take a trade. Now, pound yen. I did say to you last week, it's kind of in the middle of nowhere. I didn't particularly like it much. This area here, which I did outline, is not the nicest. I did say to you, the daily 50 MA shouldn't cause us too much problems in this area, which it hasn't done. I know it was there, but I just had this feeling it wouldn't do too much. You got a double bottom as well, so you are moving upwards. So like I said, to get this long-term bullish, you got lots and lots of confidence factors to get over. This upward sloping trend line, which is seen on the weekly perspective, to show how strong that is now, needs to be broken to the upside before anything happens. Obviously, you broke this little zone here between 147.5 and 148. You did break that zone quite nicely, but like I said, now this trend line's a key, and when you do break the trend line, you then got the 152 area as well. So for me personally, I don't like it. I'm not particularly interested at the moment. Short-term traders, yes, you can definitely trade quite a lot from that. And if you remember rightly, I said to you, it's just the 4 hours having a little run up, and that is still a 4 hour having a run up. It had a little pullback there and moving back up again. So for me at the moment, on the lower time frames, it doesn't show you any sign whatsoever of turning. There's no bearishness there at the moment. All I would say is, so just be careful. If you're buying at the top here, you are into a run that's lasted now most likely most of July by the looks of it. I'll just go down to the weekly chart to confirm that for you guys. And yes, so you're gonna have quite literally at least 2.5 weeks of bullish movement there so far, coming up to test this weekly 50 EMA there and this upward sloping trend line. So just be careful with that trend line there if you are to take it long. Like I said though, the lower time frames haven't given you any reversals whatsoever. And again, you can see on the 1 hour chart how it's just been using this 1 hour 50 MA and this upward sloping trend line here I've drawn in previous from last week, fair enough, as an area of resistance. Now, one thing I will say, if you took a short on these 3 candles here, it's kind of good. Not as it the best in the world. Just notice how the volume dropped off. As the candle got bigger, the volume did drop off. But to be quite honest though, I was looking at this. It did look interesting the way it broke the trend line down to the downside. That was with, I believe it was when the UK government was starting to look like it's a bit shaky. Where a couple of ministers actually resigned. So I understand why you would have took a short in that situation there. Other pound pairs were better, fair enough. It's just the yen is very, very weak at the moment that you've actually had this move upwards, even though the pound is weak itself. Okay, guys, so it's a bit long-winded, but I will speak to you soon. Any questions, give us a shout. Take care.